Hi future accountants, it's Diane again. I'll present you about classifications and conflicts of interest. Alright, in this video, it's still discussing about the accounting theory, but more focused in classifications and conflicts of interest. Before that, did you watch my previous video? There is a correlation between the previous video and this video because I had already talked about the conceptual framework that formulated by FASB. So, before we learn about this topic, let's take a look at the previous video. This conceptual framework became one of the references of how financial statement was intelligently completed. Before that, the purpose of making financial statements are manifold and influenced by various interests. So what are the interests that influence the objective of making financial statement? We will discover it in this video. The formulations of objective until the conceptual frameworks are affected by three interests. We have firms, and then we have the users of financial statement, and last we have the public accountant. Alright, start with the firms. This interest, these parties, is a collection of business performers in the medium levels until the high level or big companies. The firms is the parties that really need accounting. When we talk about the world of business, it's highly dependent of accounting and finance. So, why the objective of making financial statement and the conceptual framework are affected by these firms, by the firms? The reasons is the firms, those are really profit oriented. They certainly think about how to earn profit by using their limited resources. And the most important thing is they have to know how much their profits in a certain period. So they have to prepare their financial statement like income statement and then return earnings, and then have to provide their overall assets, liabilities, and then equities in their financial positions. By using their financial statement, the firms can determine the important decisions making about their economic activities or about their business activities. So these parties or these interests, the firms, can called by the most parties or the most interests that provide accounting informations or informations by using the financial statement. The firms, they really need standard, they really need guidelines to provide, to make the financial statement that I told you before. And why? Because they have to make an important decisions. For example, to know about their profits or their losses of this certain period by using the income statement, and then they can compare their income in this year, between in this year and the last year, and then they also can analyze about their business performance, and then in accounting management they also can make a plan. They can improve their internal controls until maybe the correctional controls of the firms, of the company. Because of that, These interests, or the firms will affect about what or any information that should be presented by the firms in the financial statement. So let's move to the second interest, that is user of financial statement. The second interest, the influence of the objective making financial statements until the conceptual frameworks are the users of the financial statement. Do you remember who uses the financial statement? We would like to watch again the previous video. After watching the previous video, we know that the users of financial statement not only form the firms or form the companies as the main actors of making accounting informations, but we have the other users like shareholders and then government, creditors, and many more. And then why the objective of making financial statement until the conceptual framework can affected by the users of financial statement. I give you an example. For example, the government has role to collect the income tax from the individual, and so the firms or the company they operate their business. And then the firms or the company have to pay their tax based on their income, based on their income statements and the tax rate of the income tax. It means there is a correlation between the firms and the users of financial statements, or in its term is governments. The firms need to know about their business performance, need to make important decisions for their business, so they're making the income statement and the other statements. In the other hand, the governments need to know about their income to determine about the income tax. For that, the governments need the reliable financial statements, the reliable informations, and then they need the verifiable the financial statements. It also happened with the shareholders. The shareholders also need to know about their financial statements, the reliable, to know about their performance, and to make an important decisions. Will the shareholders continue their investing in the firms or in the companies or not? Therefore, the various interests of the users of financial statements also affects about how the objective of financial statements are formulated. It means there is a need, there is an interest by these users to affect about how the information that should be prepared, that should be presented in the financial statement. Like it is only about the profit or loss, or should be present also the financial positions, also their equities, and many more. And how about their qualitative characteristics? It is only reliable or should be verifiable, and then relevance for the users of financial statements, and many more. So, after the objective of making financial statements are affected by the users of financial statements, there is one entities or one parties that interests and can also affect the objective of financial statement, that is the public accountant. So, let's move to the next slide. The last entities that can affect the objective of the making financial statements is the public accountant. A public accountant office offering so many services. One of the services is audit services. So, how does the interest of an accounting professions or the public accountants will affect the objective of making financial statement. I give you an example. A person who performs an audit service is an auditor, and then the main duties of the auditor is to verify their financial statement. Financial statements for the firms, for the companies, and the other audits evidence. So I said again, financial statements for the firms or the company. So there is a correlation between the firms and the professional accountants or the public accountant. To make audit, to make an opinion, to analyze their financial statement and to analyze their performance of the firm. For example, auditor in this case trying to recount the working balance sheets of the firm and working profit or loss of the firms. They they try to verify every element of the financial statement, like their assets, their liabilities, their equities, their income, their sales, their account receivable, and many more. All the elements trying to verify by the auditor. So with all the audit evidence, the more complete information that provided by the firms in the financial statement and the audit evidence will be help the auditor to release, to make their opinion. Alright, after we learn about the three interests or the three entity that can affect the objective of making financial statement, look at this picture. This is a Venn diagrams that can describe about how the interactions between the firms, the user of financial statements, also the public accountants, or their interest conflict. So the red one is for the firms and the orange is for the users of financial statement, and then the yellow one is for the public accountants or the professional accountant. So part 1 or number 1 is collections of informations that required by all parties, like all parties, firms, users of financial statements, until the professional accountants or public accountants. On the other hand, the number 2 until number 6 is certain information that required to be more specifically and more detailed by each interest of the entities. That is, firms have their interests, have their own interests, and then the users of financial statements, also the professional accountants or public accountants have their own interests. So that part number 6 and number 2 and number 6 can be called as the interest conflict area. After we learn about the classifications and conflicts of the interest, I've already made 4 points as the conclusions. The first is about the firms. The firms is the main ones presenting about the financial statement and need them to make a decision making interest related to their business activities or their economic activities. Also, the second about the users of financial statements, they also have to make a decision making for their interest, for their different interests, either for the direct users or the indirect users, that can also affect the objective of making a financial statements, like shareholders and in government, creditors, and many more. And the third about the professional accountant, in this case is auditor that has that is to verify the financial statement for the firms or from the company need and require all the information about the firms to collect their audit evidence. So the more detailed, the more complete the firms or the company prepare the financial statement and prepare the audit evidence, it helps the auditor to formulate or to create, to release their statement, their auditor opinion. And the fourth is about the interest of each part or of each entity, that is firms, and then the users of financial statement and the professional accountant or public accountants have their own different interests, have their own different needs, so that the conceptual frameworks should be cover all their needs, and the objective of making financial statements should be cover all the three parties, the different parties' needs or the different parties' interests. So, what are the objectives of making financial statement until the result of the conceptual framework? The things will be explained more detail in the next video or the next discussions. So that's all my presentation about the classification and conflicts of interest in this video, and thank you for subscribing me, and see you again in the future content.